Good morning and welcome to the market forecast. It is Friday, April the 9th, absolutely Friday. My name's John Hoagland. Thanks for trusting me with your time. If you're in the markets already, hopefully you've got things going your way and things going well. As always, we're hoping for good context, risk management, and patience for you. Got some interesting things going on in the markets as far as economic numbers this morning. Just got a quick glimpse at the PPI final demand numbers, a little bit higher than expected. We've got U.S. stock futures set to open somewhat mixed here. Not the Nasdaq higher, and the S&Ps I think just moved into negative territory, but kind of still buoyant as hopes of reopening continue to gain momentum. Vaccines are picking up speed in Europe, so that's a good sign. All eyes are on inflation as we kind of digest these PPI numbers from this morning. As far as crude oil is concerned, an increase in OPEC supply keeps crude prices kind of moving sideways, just in a kind of a drift, it seems. Libya and Iran now also joining with planned production increases. The VIX this morning dipped below 17 for the first time since February 2020, and over a year before the pandemic. The VIX right now just trading right at 17 last time I checked. The dollar index up a little bit, 92.35, and the 10-year yield just hanging around below that 1.7 number at 1.68%. Make sure you smash that like button and share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. Next Wednesday, we are going to be having the good doctor back. Our subject is the psychology of money. We're going to talk about how the psychology of money can kind of shape our experience here in futures trading. You know, there's lots of ways that our relationship with money, how we've earned money, all of this stuff kind of gets into how we make money in trading. It's going to be a really good session. I've just put in the link so you can register to come to next Wednesday's market therapy. Of course, we'll still be having group coaching. I'll put that link in, throughout the beginning of the week next week. As always, one of my favorite times of the week, Wednesdays, we do a lot. So, as always, I'm going to say good morning to everyone. Murph, good morning and happy Friday, all. One of our favorite morning people here, Murph. I always love the positivity. Felix, good to see you. Good morning. Brian, Sharon, Richie, Lamus, Troy, Caesar, Tactic, passed step 2 yesterday. Congratulations. I'm happy for you. That's awesome. Take your time. Just do what got you to the pro account. Just keep in the same process. Build that account. Last in it forever. That's what we're hoping for you. Mike, the chef, is here. Clarence, Cesar, Richie, Trading Research, Shady Trader. We don't have to rise. Very nice of you to say, though. Will, good morning. George, Jason, Nick, Mr. Shine's Mystery Channel. Hey, good to see you. Theo, good to see you. Good morning. Mr. Shine. Oh, like your shirt. Oh, yeah. This is one of my favorite shirts, too. It really just says it all, doesn't it? James, good morning. Rob, Rick, my brother. Yes, thank goodness it's Friday. Yes. Good morning, Andre, Patrick, Oleg, Danny Ireland. PPI released a small analytics company. Yeah, well, some people. I guess there are a couple of releases that some companies pay for information before everybody else gets it. Doesn't seem very right? Former President Joe Biden, good morning, sir. Mystery Channel, congrats. Yes, everybody, happy for Tactic this morning, as we should be. That's excellent. So I think we've taken care of business. Let's get into the charts now this morning. As always, we like to start with the daily in crude. Let me get that up here. So just kind of going again from left to right. And that seems to be what crude oil is doing overall. Let's have a quick look. All right. So, yeah, going from left to right. Not a lot of not a lot of going on. Not a lot going on here in crude. It is in rollover, so that's going to be one thing that's going to be more likely to keep us range bound. It seems the petroleum world is awaiting when this increased demand is going to come in. So the price is really just holding steady here, just above that weekly kickoff low, which is 39.46. Oh no, excuse me, 58.25. 58.25. Volume remains good, but that could be rollover related. Open interest, we lost 18,000 in open interest in a very small range yesterday. I'm thinking that's probably again rollover related. So we're not getting any really good volume or open interest information that could lead us to a direction after this kind of consolidation breaks out. So let's take a look at the 30. All right, so when you get to markets opening up here, so that we may be seeing some changes as we go along here. The crude oil really opening in range and in value, in range and in value, in range, in range, in range. It's just very range bound. No overnight inventory with which to speak of, so we're not going to be able to lean on that for an early opportunity. And usually you're going to hear me say when the market opens in range and in value, better trade locations are likely to come as the day goes on. There's no real rush to get into any particular position here without some sort of major change occurring. The market is very range bound and in rollover, so we're in short time frame control. Look at our overnight low. It's the value low from yesterday. Our overnight high kind of holding near the highs for the last two regular trading hour sessions, and we're right in the middle of it. I'm going to keep my focus on short time frame levels with which to lean on to limit my risk, and I'm going to be waiting for probably the first hour of trade so the initial balance can establish itself, and then focus on the extremes of that initial balance, that first hour of trade, looking for my opportunities. Take a look at the E-mini S&Ps. Apparently, we've got some movement going here. Yes, we're coming off the highs a little bit here. Okay, so we were talking earlier this week that Monday, Tuesday, Wednesday, even into yesterday, we were kind of noticing some things in the marketplace with open interest and Delta and everything that were kind of telling us that buyers were still coming into this market. Now, there's also my double secret moving averages here that are holding above price, and we're starting to curl over. We had a crossover of the 9 and the 13 session whole moving average yesterday, which is an indication that the upward momentum may be beginning to fall off. It seems to make sense. 4100 is a big fat round number. We've got our weekly kickoff at 4110. And that seems to be right where the whole moving average would be if we were to get up there. Now, we've got a little bit of an event moving markets right now. The volume was okay yesterday, nothing tremendous. We added another 5,400 in open interest, so it still indicates that buyers are still willing to come in and create long positions in this upward momentum. Are we going to be running out of it? Is the momentum waning? That's what these moving averages are telling me. Now, we've got a whole bunch of newer, longer time frame longs in this market. Are they going to start to protect, or are they going to bail if something happens? That's really the question. Looking at the 30-minute chart here, okay, we ended yesterday with what we call a late spike. This move at just before 3 o'clock or just after 3 o'clock really kind of pushed the market higher. And if we were to open inside of or above that late spike, we had a chance to see that in play. I don't know if we're going to be able to see it. Here's another late spike. Here's a day when we opened above the late spike and we continued to move higher. So when we open in or above a late spike, it indicates acceptance of higher prices. We've just opened below that late spike. This rejection of prices higher might be an indication that, of course, yes, maybe we are losing some of that upside momentum. Doesn't look like we're going to have a gap. Looks like we're going to open in range and in value from yesterday, which does give me the idea or the possibility that, hey, you know what? I'm going to be able to relax a little bit. Maybe better trade locations will come as the day goes on. I think we're getting a little bit of a reaction from the PPI numbers. A lot of people concerned about inflation, as we should be. Is it going to be enough to topple this? We don't know. The S&Ps have been able to do amazing things in the 30 years I've been looking at them. They are very resilient. Investors are very resilient. A lot of question as far as inflation is concerned, but we're going to trade what we see. We're still looking at this market as a market that is inherently strong. We're going to be looking for opportunities to buy weakness. Where does that break? Where do we break that upside kind of feel or momentum? It's really tough to say because there are so many targets and gaps and things that were left unfinished down below. Now, those are going to be important if we start to head that way, but are we going to? I mean, right now, we haven't really changed the perception of value of the S&Ps as of yet. On the open, we're going to see where we open. We open back. If we manage to open back in the late spike or above it from yesterday, that's going to be acceptance of higher pricing. We may have attracted buyers to come back into this market. We've been seeing buyers, longer time frame buyers, all week. So are they getting too long? Are we all in yet? Because it's when we're all in, when everybody has bought into the fact that the market is going to go to the moon, that's when the change is going to occur. It's going to be very difficult to time that. Take a look at the NASDAQ. The NASDAQ has been trying to get back to that new high. Doesn't look like it's going to happen today so much. The NASDAQ was presenting as the weakest of the four U.S. stock indices that we do check from time to time here. It was lower this morning when I got up. It's still lower than the Dow was higher, the Russell was higher, S&P's just turned lower, and the NASDAQ's been kind of holding lower for the better part of the night. So what did we do as far as volume and open interest is concerned? Well, finally, we went from short covering to new longs yesterday. 3,000 increase in open interest indicates some money came into the long side in the NASDAQ yesterday. Volume held up pretty well. We've got our all-time high in sight here. It's like the market is trying. It's going, I think I can. It's like the little market that could. Can it? Questions. 30-minute chart. Okay, so this is a bit of an issue here, okay? We may be creating an island top. If we open with a gap and we can't close this gap, we drive lower. This range here is going to be called an island top, and it can be a pretty powerful reversal signal. So it's going to be an interesting trading day, even if you're not active in the NASDAQ, to see how this plays out. If we can't close the gap back to yesterday's range and we create an island top, that could push us back down to our weekly kickoff high here. And that's going to be somewhat pivotal at that level. So it's I wish I could just sit here and say, okay, this is what's going to happen, but nobody can do that. We have to trade what we see. We've been noticing in the S&Ps and in the other stock indices that the momentum might be beginning to fall off according to those moving averages. Now we've got a signal where we may be kind of reversing direction for a while in this island top. We have an island top in gold possibility today as well. So we're opening with a gap in the NASDAQ. This is a little bit of a different situation than the S&Ps are in. We're opening in range and in value. Here we're opening flat out lower. If we can't close this gap, that's going to be, again, kind of a downside omen, if you will, for the NASDAQ. Now, again, being a U.S. stock index, they can do amazing things. Yes, Nick is noticing right here, we've got the head and shoulders. Here we go. So if we were to go from the neckline to here, where would our termination be if this is indeed going to be here's the neckline to here. Now we break the neckline. Where does it take us? Back to weekly kickoff low, just as we were saying. Nice eyes there, Nicholas. Good job. Gold. Gold is pretty high on my radar this morning for a number of reasons. We had a nice pullback. We had a nice move up above that weekly kickoff level yesterday that provided a pretty decent upside opportunity. But by the end of this session, it looked more like short covering than new business coming in. We did add 9,000 in open interest on higher volume on that push to the upside, but now we can see that the market has rejected price above that 1750 weekly kickoff high. I was looking at it this morning that it was going to be pivotal, and it certainly was, because when we opened the regular trading hour session, we had been pushed back down below. We opened with a gap, and the opening range is the high of the regular trading hour session. That opening range high here is 1744 even. So this is one of those situations when we open out of balance from the previous day, when we look at these opportunities as possibly earlier opportunities to get into a trade. And this certainly has panned out to be one of them. I mean, we're looking at about, I don't know, an $11 move here. It's $1,100 for one contract, right to where we are now. So a pretty decent opening range trade to the downside. The opening range was pretty big. It was a riskier trade, but it was certainly paid. It has certainly paid off so far. Now, what I'm looking at is here's our open. So we've got a gap higher that was yesterday, a very P-shaped profile, which indicates short covering, and short covering takes buying power away from the marketplace. You think about it, if there were a bunch of shorts that needed to cover because we had broken out above here, all of that buying kind of takes that need to buy away from the marketplace. So we've got settlement all the way up here at 1758.20. We've got a lot of shorts in this market from overnight, but if all of those shorts decided they were going to get back in, now they're going to start to get paid. Again, I want to show this here on the TPO chart. Here's the gap to yesterday's range. Here's the gap away from yesterday's range, leaving an island top. Basically a short covering event above an important inflection level that has now been rejected. There's some pretty possibly meaningful moves perhaps coming off of that. The market moved higher, left an island top, is now moving lower. It wouldn't surprise me if we had a much deeper pullback than we're seeing right now. Euro. Pretty decent move to the upside yesterday. And a couple of family members take pretty good advantage of that upside auction, but it does seem to be losing steam. That upside move yesterday, again, was probably more of a short covering event that does take buying power away from the marketplace. We lost 1,100 in open interest yesterday. It was a pretty good trend day to the upside, but it has kind of fallen off today. The dollar, again, a little bit stronger this morning, so that kind of falls in line with that. We're in an inside extended trading hour range. We have not left the extended trading hour range from yesterday. This could end up actually just being somewhat of a pullback. I'm watching the bottom of the ranges for the last 2 days for a potential opportunity. Taking a look at the 30-minute chart now. Settlement all the way up here, 119.33. So here's that move to the upside, and it doesn't even present itself necessarily as a kind of a short covering event. It just kind of went on all day. Usually we'll see a P-shaped in the profile when there is a short covering event. So this is the area that I'm looking at as a potential opportunity. Our current regular trading hour session low. I don't really want to step in front of this, but if we start to build some structure down here, this might end up being somewhat supportive. Again, opening in range but out of value. We're seeing if we can accept below value, if we can accept below the ranges from the last couple of sessions. It might be an interesting opportunity in either direction. I just like this area, this kind of a target-rich area, because it allows me to limit my risk. And the 10-year kind of hovering, rates kind of hovering just under 1.7% in the 10-year. It was kind of a hollow upside move yesterday. The upside move didn't bring in more business, more volume, and we lost 32,000 in open interest yesterday. So more of a kind of a short covering event than buying actual real new business buying coming in. So it kind of makes sense that after a hollow move yesterday, we're coming off pretty good here today. Taking a look at the 30-minute chart, the settlement price 132 even. We've got a gap to the downside on the open. If we can't close that gap relatively early, this pullback may continue to kind of push prices lower. I'm not really expecting that. It seems as though the rate is kind of stuck where it is. And if we've got all these overnight shorts here, again, I don't want to step in front of any moves. I'm going to be looking for some sort of structure to give it to kind of appear before I start looking for any longs. And, with all these shorts in the marketplace, if they don't continue to get paid, at some point they're going to jump. They're going to bail. We're going to see an event moving price back higher. Perhaps it's going to give us an opportunity to sell a strength in this market. But, it's iffy. It's iffy. I'm going to leave that at that. How do you like that? It's iffy. Yikes. All right. So, well, it's been a really good week in trading. It's been challenging. I think the last 3 weeks have been particularly challenging, but it seems to me that at least to me, that the markets are seeming to make a little bit more sense, or speak to me a little bit more than they did for the past couple of weeks. So hopefully that's the case for you. Looking forward to a nice weekend. Got a nice full day today. A couple of days off. Be ready for next week. Again, Market Therapy with Dr. Menaker, 3:15 on Wednesday. Make sure you reserve your spot. And we'll look forward to talking to the good doctor, seeing what he has to say about the psychology of money. And of course, your questions are always welcome. And we do try to get to as many as we can. So looking forward to that. Looking forward to a good weekend. Be good to yourself. We work hard at this. You deserve good things. Be kind to yourself. Be kind to others. That's what the shirt says. And I'm going to take my deep breath. Be ready for the markets today. Humble, grateful, creative in your trading. Get out there and profit, trade well. And now, join me in the Friday dance. Yeah, it's Friday. Trade well, and we'll see you next week.